Hello guys, welcome to the Trading Parrot. I'm just coming back from my holidays. I took a couple of days off. A lot has happened in just a few days. We went straight to take the liquidity around 55k, supposedly because of all the selling pressure coming from empty gogs in Germany. And as I promised you, opportunity is just around the corner. During summer, things can get pretty tough. But in this video, I'm gonna focus on a potential breakout to the upside on the 4-hour that we are currently experiencing. I'm gonna tell you whether I trust this breakout, how high and what is the highest level of liquidity on the downside that could be the final level of support. We have to put all the pieces on top of the table, analyze the probabilities to understand what is ahead of us. If you like this type of content, make sure that you're subscribed to the channel, hit the notification bell, and if you feel like supporting the channel, make sure you watch the video until the very end and do not go anywhere without leaving a comment down below. That's really helping the channel to continue growing. And a friendly reminder that we have done a massive partnership with Bybit Exchange, and right now we can offer not just up to 30,000 in rewards, but also if you join my Discord community, you can go straight into Bybit Perks channel and connect your Bybit account to our Discord server. And by doing so, you get up to 70% off of most of the TTP tiers, which offer hundreds and hundreds of different indicators that you can use for automating your trading and also for analyzing the market like we do in most of the videos. So let's start from the beginning. We say that in June, typically when you see a red month, that is followed by a green month. And so far what we can see is that July is almost doing worse than June. I think we need to be paying attention at the big picture because right now we have lost the 60k level. This was a very important level to hold, but after 4 consecutive months in this range, we are finally out of the 60 to 70 range, which was promising to give us higher highs. But right now we are on the way towards this trend line right here. That is the highest likely scenario. Of course, anything can happen. This could get bought up in a few days and continue going higher. And that's why I'm building my position, holding some Bitcoin right now and looking for the next entry to average down. Many things are pointing to the range of 50 to 52k. I'm going to show you all the evidence, but I remind you that nothing is guaranteed in trading, so we might not touch those levels. I think it will be quite healthy to come to test the 50 to 51, just above the 48 that was this order block with the beginning of the bear market. That could be a way for the price to confirm that these levels are strong and that we are due for continuation to the upside. Of course, it will be much nicer for people that have low patience to get bought up right here and continue from right now. But we're still in the middle of the summer with a huge selling pressure. Anything can happen, but that is the lowest likely scenario right now. If we look at the monthly bubbles, we can see that pretty much the whole bull market in terms of the altcoins has been reverted. But as usual, when these things happen, the Bitcoin dominance starts pushing higher. And we continue in a Bitcoin season. We started Bitcoin season at the beginning of June, so it's been 1 month of Bitcoin season pretty much. In 2021, we exit Bitcoin season from around mid-August, and in 2020, we spent in Bitcoin season a lot longer, from November to January, but at that point, Bitcoin was pumping hard. In the bear market, the Bitcoin season can last a lot longer. So now let's focus on Bitcoin on the 4-hour and in 1 day to see what are the important levels that are coming next and what's the likelihood that this breakout on the 4-hour has any future. In the 4-hour, at first sight, this looks like a genuine breakout, but we have the weekly and now we have the daily downtrend as well. That's going to bring a lot of selling pressure against this long setup, and we have to acknowledge that. Starting with the fact that after we lost the pivots, we say that after staying around here, we might see some strong rejections from these levels and then head down to the first level of support that was located at 56.8. Our next levels of support are located at almost 51, followed by 43. And also notice that I have this line here that is in confluence with that 51. So we have 2 elements that are calling for the price to come and pay a visit to those levels. Another thing that is worrying me is that right after losing the first level of support, we are coming in here and we are seeing how the price is struggling to re-enter to these levels. CPR levels are not magic and this level that is here that was bought up very quickly. So that was the support that probably is influencing this CPR level there. So being rejected by the first level of support on the CPR in July and coming from below, it's like saying this level of support from the before is now turning into resistance. And that is pretty worrying in regards to this breakout. Because if we don't manage to break above this 56 and start moving very quickly and challenging these CPR pivots, we might as well come back and pay a visit to that 51K. When it comes to the daily, things are not looking that bad. There are a few things that are calling out for a potential reversal that I feel obliged to mention them in the video. Number one, we had the daily breakout right here. We went straight to 44. We were expecting that after this breakout retest, we were going to manage to get even higher. We barely made it to 63.8, which was $200 away from our conservative target. But after all the selling pressure from empty gogs and Germany, the price just couldn't go any higher. So it took partially all the liquidity from the shorts and then started plummeting straight away. What is very interesting is that it came back here for a potential retest of the breakout, which after you see this, it doesn't look that bad. You can even see that it's forming higher highs, which is not yet confirmed, but if we were to close the day slightly higher, we could be starting to form here a bullish divergence on the daily, which is not going to be enough, but it's something to put on the side when we are considering how far is the reversal from us. I think if we broke below this trend line, things are going to be really ugly. Another thing to mention, when I woke up this morning, the RSI was at 19. 19 was very close to August 2023, which was a big sell right here before shooting back up. Second thing that is bullish on the daily is that we are finally inside the cross-V ratio. We have been inside the cross-V ratio in this bull market only 2 times. 2 opportunities to get in. One was at the bottom of the bear market at a price of 17K, and the second opportunity was when we were at 25K to 26K. No more opportunities, and after those opportunities there was usually a big push to the upside. So I'm looking to add more right here to my DCA spot position, which means to rebuy everything I sold from 73.5 and potentially even more. I strongly believe that the bull market is not over. But again, nothing is guaranteed. Another thing that is bullish is that this trend line has been respected every single time when the price is finding support. Right now we are getting bought up from before this, but we are targeting the resistance at 57K, which was the support around here. So if this rejected the price once more, I strongly believe that we could come here to the 51 to comfort the confluence of both the support of 51 coming from the right hand side, the support from 51 coming from this volume cluster there, the trend line that I just mentioned, and the CPR monthly as well. There is a lot of confluence around 51K. That just increases the chances for that to attract the price and to bounce from there, but it doesn't guarantee it. So if you're going to take a trade there, you have to do as well your own due diligence, your own research. We are just confronting as well the 57, which is another big area here of volume from below. So my worry is whether the price can really hold. CPR was also talking about the level of 43K, which is also highlighted from the point of view of the volume profile. And the breakout from the delta from the longs versus shorts was really underperforming here. We have to say that after being in this area and barely making it to 53, and that's just the top of it, I find it really intriguing. I will expect here the longs to step in and push this slightly higher. If we look back in time, shows how negative the market is right now. The shorts are exposed themselves quite big here. All of this is happening against what the Nasdaq is doing and the S&P. They are both starting to push higher, although the Nasdaq is approaching the resistance on the RSI from below. This is a bearish divergence. We will have to see how far the Nasdaq can continue going. The DXY is still pushing lower. I will be looking at these areas for a potential beginning of a high being formed somewhere here just because it's been so many days in the red. You can see that the hash ribbons is still in capitulation, although we were speculating that the mouth of this was going to start closing, which is what happened when we start moving towards 64K. Then right after that, the price started plummeting with all the selling pressure, not just from empty gogs in Germany, but also from the miners that must be in a huge stress right now. And you can see that we lost the bull market support band once again during this bull market. The previous time was around here on the 14th of August in 2023. We approached it as resistance once, and then eventually we crossed back above it. So right now it's no surprise, but 60 to 61 is probably going to become our new resistance, and that's the level that we're going to have to overcome. The bull market spans up until 65K, which makes a lot of sense. 65K was the point of control all the time we were here. We highlighted it multiple times as the difference between being bullish and bearish. We are back again in the fear territory, but this time we are in a lower low. We are at 29. A few days ago, we were at 31, if I remember right. And you can see that we are forming here an area of a lot of fear. If we go back in time, the last time that after a bull run we started entering into the 30s was this area here in April 2021, and right after that we spent all these times below 30, and that was still part of the bull market. Then we have a final push in September to October 2021, and one of the things that has me sometimes overthinking this market is the fact that Bitcoin made an all-time high before the halving. And when we were at these times, we still didn't make any all-time high. So we rush a lot with the ETFs and all that stuff. It's quite normal now to be paying that debt, catching up with punishing too many longs in the market, reducing that open interest, which is healthy. Now what I'm thinking is how hard it's going to be for the price to break that 60-65K. Whether it's just going to take 1 month or if it's going to take many more months, it's anyone's guess. But just by looking at the patterns in the previous performance, typically when we enter and we stick around in these areas of high fear, tends to span a little bit longer. The time that we spent between 60 to 70K, which was over 3 months, I don't consider that yet as an area that was bearish. It was just ranging. It was bearish for the altcoins, but not for Bitcoin. And we have to pay a visit to the weekly RSI because, as I mentioned, we broke below this level. It was a very small breakdown. We approached it as resistance, which I published on Twitter, but we never managed during the whole week to be above 57, which was the key to repeat this scenario here and then push higher on support. We could have forgiven to be just 2 points below support and then break above 57 and shoot back up. But since now we are pointing halfway towards the target of the head and shoulders on the weekly, that level 37 to 36 on the RSI, that now corresponds with 47.7. And now this trend line is our resistance. And if we look into the price, we can see that we approach it from below, we got rejected, and we started coming back down. In terms of the stochastic RSI, that was looking for a moment like it was going to do a bullish cross. Since the week is still in progress, it opened the mouth back again. So we will have to be waiting for this crossover. And yes, guys, as I mentioned as well on Twitter, there was some distribution going on right here at these prices, and I mentioned that that wasn't as big as the distribution that we had around 73K and around 72K. Here, the ratio is currently at 1.31 versus 1.7 and 2.1 at the top, but I think this ratio right here, after so many months of distribution, is causing a lot of fear. And we will have to see if this manages to break above this level, which at that point it will mean that we have already hit 51 and hopefully not breaking below that. Lots of people on Twitter are publishing pretty disturbing information. They are misinforming people, talking about the 72K being loaded and packed with liquidity. I remind you that when we were here at 72, we didn't even take that liquidity. We started dumping from there. So it's always good to think that it's not just about where the liquidity is located, but there's also the sentiment in the market and a lot of other things that can keep the price from not taking certain liquidity. In this case, we were looking at 55 and it was always there. I never guaranteed that we were going to make it there. I say that if we get to 56, I was going to buy it, which I did. And I'm also going to buy if we get to 51. But I think it might take quite an additional time for the market to recover and to be able to ride that trade in profit. We were watching area of liquidity here. We say that we had this homework to be done. We went to 63.8. We took the top liquidity and straight back to where we came from, and we started aggressively targeting the liquidity right here. That's precisely what happened. Now we have left big chunks of liquidity at the top side, starting from 57.5 to 59, and then 60.6 to 61. And then the usual suspects are at the top, but we have still all this liquidity that finishes at 50K. And that is, I think, right now the incentive that I'm worried that it's just too easy to go there and grab this before starting to reverse to the upside. I remind you that I do have a position, so if the price never made it and never took this liquidity, I have now Bitcoin that I rebought after selling at 73.5. So if we start going back into bullish mode, I have Bitcoin, but I also have a decent amount of dry powder to add at 51 and to add below that just in case, because you never know. There's actually over 14 billion in people that will get liquidated if the price went to 70K, which is a lot. And many people are going to talk about this as an argument that 70K is just around the corner and that is enough for the price to shoot back up in a few days. It's very low likely. It is possible. But because it's very low likely, I wouldn't count on it. I'd rather focusing on the targets that are realistic and with very high accuracy. And for the bulls, we can see that finally we are forming some support here at 52K. That bid wall right here is not as big as the one that we had at the beginning of May that protected 56K, but it's something and it's more than what we have been seeing around here, meaning that the interest into buying Bitcoin is increasing with the price getting lower, which makes a lot of sense. But it's actually good to see in practice that is taking place. You can compare this yellow with the yellow here, and then compare it with the yellow at 37K, and that makes it quite easy to understand why this 52K might not be enough yet. In the order book, you can see the massive liquidations that we have on the 4th of July that span all the way to 53K, and then the buying wall started stepping in, buying at market price, and now we can see how they are placing their ask liquidity here just because 56K was before a level of support, and it could be the case that now is becoming our new resistance. Open interest has climbed very high. It went all the way to 91K from 74K, and since it's still quite high at 82K, I think the price may want to punish some shorts before taking that 51. If we focus on the yearly liquidity, you can see that around 51 is the largest level of liquidity, which is another takeaway for you to think whether the price is just going to leave that there. I think this increases once again the chances that we go for that level. When it comes to the longs and shorts setup, we can see here that after it crossed 70, we have this move that gave barely 6% to the upside. Right after that, it's starting just crashing once again, being above the level of 70. And before I let you go, I'm going to remind you that we are below the 200 daily moving average. That is typically what signals being in a bear market, but you can see that in the previous bull market, we managed to get away with being below it, and then during this massive dead cat bounce, we managed to once again conquer both the 50 and the 200. So it wouldn't be surprising to stick around maybe here and eventually shooting back up once these things are crossing in this way. Let's leave that drawing there and let's see how good it ages. Thanks so much for watching. Don't forget to leave a like to this video and write down a comment down below. See you on the next one. Take care. Bye bye.